Welcome to the channel. Today's date is April 10th, 2025, and the stock market is really falling. We're going to talk about why we think the market is going to go lower and what we're doing and what we plan on doing in the future. Let's get straight into it. You can see here on this day that the market is off its lows. The S&P is down 241. The NASDAQ is down 887. The Dow Industrial is down 1,500. At one point, the Dow Industrial was down 2,200. We did have the big rally yesterday off of Trump saying that he had agreed to some tariffs and they was going to negotiate, and he took tariffs down to 10%. Um, I think that's still really high. He actually went up on China to 145%. I mean, there's a number of reasons that we think that this stock market is going to go a lot lower. First off, we were in one of the biggest bubbles that we've ever had. If you go back and watch my old video, especially in October, and a lot of people, that do view my channel, a lot of people was making little comments. You go ahead and you sit in your T-bills. My T-bills at the time was paying, and they're still paying 4.29%. And I just kept rolling over my T-bills. I didn't like where the stock market was at. I believed that we was in a bubble. I didn't know what was going to bring it down. I certainly didn't know that the president was going to come on and initiate all these tariffs, even though what he's doing, I believe, is exactly what needs to be done. If he doesn't do it now, what's going to happen is a few years from now, when our debt just get way too big, somebody's going to have to do it. And it's probably easier if we make ourselves do it. If we do it on our own instead of making the world make us do it. But there's several problems that we have right now. Mainly is that, besides the biggest bubble, is that the bond market, as these stock markets are falling, under most circumstances, bond yields start going down. They think that the Federal Reserve is going to come in and cut rates, which mainly they cut their T-bills. So I'm happy they're not cutting. I mean, so the bonds normally go down. But the big problem is the inflation report came out today, and it was pretty good. Not counting oil and food, it was up 2.8%. I believe we're counting oil and food, because we know oil is down by a lot, which is a problem. Oil just going down. We was at 70 like this time last Thursday. We're back below 50, even after the big rally that we had yesterday. We're back below 60. I'm sorry, we're at about 59 right now, which is a problem. A lot of times stocks are the last one to predict. So we talked about bonds rising. They're up to about 4.37%. When the stock market first started going down, they actually fell below 4%, but now they're rising. And that could be for several reasons. One, foreign countries might be getting back at us for these tariffs, and they might be selling our bonds, which would be tragic. If they start selling our bonds, that would be tragic. And then they were believing that there was people that was being called in on margin and was having to sell some of their assets to cover their losses. So that's bad. If that's keep happening, that's actually really bad. And then as far as that rally yesterday, the two big down markets that I lived in 2000 and 2008, every time we got a real big jump in the stock market, but normally it was because the Federal Reserve, we just get a blow up. And it's normally because the Federal Reserve is cutting. But the Federal Reserve is saying they can't cut right now because of inflation. Even though Trump is asking for them to lower rates, they can't lower rates because of inflation. So, and then on top of that, we're going to have a recession. We was already in a kind of a bad economy. Joe Biden hired all these federal employees, and now Donald Trump is getting rid of all of them. So they're all having to leave. So that's a problem. And so they're going to help unemployment, but it's people thinking it's going to show up next month. I don't believe it's going to show up until like October, because he actually laid them off, but they're allowed to keep getting paid all the way until October. So I don't believe those numbers are going to show up. And then with the stock market falling like this, there's, people in the lower class, they were already been doing bad. They've been doing bad for years. They've been doing bad for 2 or 3 years, having a problem with inflation, not having much spending power. You can go look at the dollar stores. Stocks are in the tank, but they're doing pretty good right now because more people probably gonna have to start going to dollar store. But the more affluent is now starting to be affected with the stock market going down like this. The NASDAQ, I believe right now, is down about 20%. It did get up above 20%. And it was in bear, and that's bear market category. The S&P is not down that much, but it is in correction territory. But I believe we got a long way to go. I believe we got a long way to go. Because when you're going from a bubble and then you got to get down to, because we're still overvalued. Even after being down 20%, we're still overvalued. And so I believe we got a long way to go. And unless Trump give up and stop his fight, which is something that he really believes need to be done, if he doesn't stop this fight, I don't know how low we're going to go. It's going to get really bad. I mean, you're talking about pension people out there who've been saving up all their life and they had a really good stock market. By the way, we done already took out all the gains of last year. We had 2 years, 2023 and 2024, back to back 20%. We already gave back 2024s, and we're going to give back 2023s also. We got a long way to go. But the good thing is that there's value being created. There's value being created. And what you should do, or what I'm doing, I'm going to start letting my T-bills expire, especially as we keep falling. And I'm going to start picking up some really good companies. America has some really good companies out there. Talking about things like Meta. I don't know about Apple. I don't know what Apple's going to do. Apple makes the majority of their iPhones in China, and China got 145% tariff. Are anybody out there going to pay 150%? So if your cell phone costs $1,000, you might have to pay $2,500. You might have to pay $2,500 for an Apple cell phone if these tariffs stay on. They say they may negotiate a deal. I don't know. But if these tariffs stay on, everything is going to get a lot more expensive. And I'm actually really worried. Most of our t-shirts, socks, clothing, all that stuff is made in China. And there's already saying people is canceling orders coming from China because they don't know how much people over here are going to be willing to pay. They don't know. So, I wouldn't be surprised if Walmart shelves be a little bare. I don't know. But what you got to do is you got to pick real good companies with really good balance sheets, and they got businesses that when we get on the other side of this are going to be thriving. And I just use Meta. Meta is a social media platform. It's not being hurt by tariffs at all. I am a little worried that if Europe want to get back at us, they because we don't ship that much stuff, they may try to come after our service companies. They may do that. I don't know. They may do that. But, we still at a pretty high PE. Actually, if I had to guess, I think the S&P is at 5,200 right now. I wouldn't be surprised to see it at 4,000. That's where we might have value. And then companies, they're just because of all these problems that we got out here, one of the first things, as they see their businesses start to slow, they're going to lay workers off. They're going to lay workers off. They're not going to have a choice. So then all these things are just going to spiral the thing just out of control. Just out of control until we hit rock bottom. We're going to kind of know when we hit rock bottom. When it's a whole lot of pain out there, that's when we know we're going to hit rock bottom. I would hate to be like 65, getting ready to retire from my job. I done already watched my 401k drop by 20%. I got to applaud them that they hold in there. But I would be a little worried. If I was 65, I would have already sold though, because the stock market was just so overvalued. Nothing just keeps climbing to the moon. Nothing does. So I'm going to stick with my T-bills. I'm going to wait till we drop probably another 30% from here easily. Probably another 30% from here. I'm starting nibbling. I have started nibbling. Hold 1 second. I just want to make sure I give a shout out. I wrote this book with a friend, and when the stock market drops below 10%, in this book we talk about, in the culmination, we talk about buying the QQQ and SPY. If you don't really study companies, or you don't have time to study companies, you can just buy in the tracking stocks. You just buy the bad part is that the tracking stocks are gonna make this downturn even worse because everybody piled in. Everybody piled in the stuff like the SPY and the QQQ. They're sitting in their retirement accounts, and as they sell, they have to rebalance, so they have to sell some of the shares that's on. So it's just a big snowball effect. That's what I think is going to happen. I'm going to try to make more videos. I haven't been making videos lately because I've been trading a lot. So I just haven't really had the time to make more videos, but I try to get on here and make more videos because you can go back, look at some of my videos, go back to October, go back to September. I was making video. I even made a video in January and somebody laughed at me. I said, it's 2025, the year of the big downturn. I made that in January and here we are, April. It's the big downturn. So y'all stay safe out there. Good luck investing and we out.